As you know, index inclusion means that the passive flows, that is the bond funds which are using this JP Morgan as the benchmark, they have to allocate close to the benchmark weightage for India. And what we understand is that India will eventually get a weightage of 10%, and but this won't happen immediately. So starting from June 24, every month the weightage will increase by 1 percentage point. So roughly speaking, each percentage point should result in anything between $3 to $4 billion. So that's the kind of inflow which you would expect from say June, starting from June 24. So this is a positive development in the sense, in the BOP sense, money will come in. But having said that, it's also possible that the Reserve Bank won't allow the whole amount to get absorbed. And therefore RBI has various methods. RBI can do intervention in the foreign exchange market and suck up part of this inflow. So basically, this is positive for Indian debt market. This is positive for India's balance of payment. But having said that, RBI might not allow the whole thing to get absorbed. Ideally, if RBI doesn't intervene, then rupee should strengthen, but RBI can intervene and keep the strengthening of rupee under check, especially if the overall BOP position is supportive. Also, what will happen is that whenever RBI buys dollar, RBI has to release the equal amount of rupee liquidity into the system. So that might create an overhang of liquidity. So if $3 billion a month, that means that's quite a bit of money inflow. So to neutralize that, RBI might have to do open market operations of by selling bonds to sterilize the impact because of this intervention. So basically, we think it's positive for India, both in the short term and the long term. But this effect on the economy will take some time to percolate.